A question I get a lot, and I mean a lot, is what is infinite banking? You might have heard it called the infinite banking concept, or privatized banking, or banking on yourself, or the and asset. There's all these different descriptions, but today I'm going to break it down in the simplest way possible so you can really grasp it. Understand this can be a game changer for you, your wealth, and your legacy. As when I first read Nelson Nash's book, Becoming Your Own Banker, I thought every single American should know about this and apply it. And I still believe that. So stay tuned. And if you guys haven't, make sure you subscribe to my YouTube channel, hit that bell for notifications, and give this video a thumbs up. So let's get started, let's dig in, let's have some fun together. So what exactly is infinite banking? For all of you experts out there, let's bring it back and let's see if we can learn something new today together. Imagine taking back control of the functions of banking in your life. What's that mean, Jason? That's what infinite banking is all about. Think of it like this. Instead of putting your hard-earned and very hard-earned in some cases if you're on physical labor, earn money into a regular bank account. Do you ever even stop and think about why you deposit your money in a bank account? No, that's how you've been taught to do things. You've been taught and groomed by our system that your money is safe in the bank. And the bank, being so nice in such a nice area, is going to take really good care of your money. Am I right? Does that make sense? Is that how we're usually doing? But then when we start looking at what's happening with the money that we deposit, that we put in our local bank, our local big bank, our local credit union, we start realizing we're earning next to zero in interest. Our money isn't protected from legal judgments, and all we're teaching you how to do is to change the one thing. Where does your money, your hard-earned money, go first? And this is such a paradigm shift for so many people. Remember in our longer example in the money multiplier presentation, we talk about the backwards bicycle. And we show you how when you ride a regular bicycle, because why? Kids learn fast, right? When we ride a regular bicycle and we're pedaling, we push down the pedals, the bike goes forward. It doesn't go backwards. Imagine that. That'd be weird. And now when we ride, we turn right, the bike goes right. We turn left, the bike goes left. And this paradigm shift is, just imagine riding that same bicycle and we turn left and the bike goes right, and we turn right and the bike goes left. It's just a different way of making the grooves in our brain go. But we can do it. It's a new paradigm. And this is empowerment, and it gives you financial freedom. And we keep it as simple as possible. Remember, my motto, keep it simple with Sipple. And it unlocks your potential because why? It gives you confidence. And confidence in what's happening with your money is a game changer. I went from someone who thought I could just outwork this system. Can I get some eyes in the chat if anyone grew up like this? We learn to show up first. We learn to work harder than other people, or as hard as the hardest working person. We learn to stay late. We learn to add value, to be polite, and to be someone that was supporting those around us. And that's who all of you guys are. You love people. I love people. But that is not a recipe for financial freedom. As Einstein says, we have to know the rules of the game, and then we can play better than anyone else. But you know what's awesome about this community? Not only can we play better than all the other people that don't know about this yet, we love everyone so much that we are going to share, we are going to teach, we are going to be leaders in our homes and our community by changing just this one thing. So let's talk about this. Let's dive in even a little deeper. So when we look at the status quo, the big shift, right? I already talked about, and I love, look how many eyes are in the chat, you all. Like, think about that big shift. Think about how we've been taught. Remember how excited you were as a kid when you got your first either ATM card, or back when I got my first checking book, right? We learned, we went and we had our money. My first bank was the First Bank of Hope, New Jersey. Beautiful bank. Like one of the nicest buildings for sure in all of Hope, New Jersey. All probably 800 people that live there. Super small. It's actually where they filmed the first Friday the 13th. Jason Voorhees, yep, part of my New Jersey lore, right? But imagine the big shift. Imagine with traditional banking, we're depositing our hard-earned money, and that money's not staying in the bank account. We've talked about this. If we had a $100 bill right here, and we wrote my name on it, or we wrote Anthony's name on it, or John's name on it, and we deposit it, we go deposit it with that teller, and that teller takes our money, goes back, they look all nice, they got their nice watch, they put the money in that deposit box, and then we leave. That money doesn't sit there. That money's instantly in motion. When we go back to take money out, we're not getting that same $100 bill, that same $50 bill, that same $20 bill, are we? No. The banks take our hard-earned money, we deposit it, they move the money, and then they pay us 0.06%. And even if we have our money in a high yield savings account, 3%, 3.5%, 4, 4.5, 4.25 with someone that was here last week, right, in our webinar together, where you're still getting taxed on that. There's no legacy. There's nothing more than you can use that money. It's liquid. It's in fractional banking system, which means by definition it's unstable because it's only backed by 10% of the money, and it's not protected, as we already talked about. So if you're a business person and you own a business, or you have real estate and someone gets hurt on your property and they hire a good attorney, guess what? That money is accessible to a good attorney. So right now we've been taught to take our hard-earned money and put it into the local bank, the Chase, the Wells Fargo, the Bank of America, whatever it might be. We're not really thinking about why we're doing that. So all I'm offering is let's change that one thing. Where does the surplus money go first? That surplus money is going to go into a system that I'm going to talk about with infinite banking. That is where the banks actually keep their money. This is all tracking for you guys so far. Just think about this too. I just added this one fact. It's so fun. Go to BauerFinancial.com. I think that's BAUER Financial.com, and go check out your local bank where you're keeping your money, where your paydays go. Banks are earning 400 to 1300% on our money. We work hard for that money, right? Drew works hard for his money, even though Drew's always having party time. Like every webinar Drew comes to, it is party time. I love that. Keep bringing the party, Drew. So let's look at the infinite banking difference. Let's look at the power of compounding contractually guaranteed money. Let's talk about stability. Let's talk about where all 4 of my family banking policies are. That company has been profitable for 148 years consecutively. Think about that. Think about all the things that have happened during your lifetime. Think about all the things that have happened during your parents' lifetime. Think about all the things that happened to your grandparents' time, and maybe even your great-grandparents. That's about how long 148 years is. We're talking about all the major wars, World War I, World War II, Vietnam. We were talking about the beginning of the Fed in 1913, the beginning of our tax code as we know it in 1913, coming off the gold standard in 71, the 2008 housing crisis, right? The pandemic. Think of all of the things, and these institutions have been profitable every single year. You're never seeing one of these A+ rated, mutually owned, dividend paying companies in the news as going bankrupt and getting bailed out. Why? Because they are outside of the system. They are the bank's banks. Think about that for a second. So where we're telling you that your money is better kept is inside these institutions, inside a contract that you control. And then you have tax-free growth. You go from that 0.6% that's on average what a bank is paying you, right? Why do they even pay us that? That's almost insulting. They might as well give us that dumb sucker and 0.6%. There you go, Drew. Here's your dum-dum. Here's your 0.6. Have a good day. Ciao. Hasta la vista. Bye-bye. right? No, we want a contract that has our name on it and says 3.25% for your whole life, for as long as you live. Does that not sound better? Give me some heck yeah in the chat if that sounds better, right? And down below in the notes. So we're telling you, take your money where it is taxable, where it's at 0.6%, put it someplace where it's tax advantage, and it's growing tax free. And this is all by changing that one thing. Where does your money go first? And again, the dividends aren't guaranteed, but let's think of some things that might happen when people ask me, what happens, Jason, if the dividends don't get paid? Well, maybe that's one time in 148, 160, 170 years, 137 years. These are the mutually owned companies we work with, folks. That's how long they've all been profitable. So maybe there'll be a giant meteor and it'll hit Mexico again and bring on the next ice age, wipe out all the people. That might happen. Or maybe it'll be a big EMP that'll just put us back to the dark ages. That might happen. Maybe it'll be another giant pandemic. That'll probably happen. Change is always going to come, but we want to know what is the best option we have now, right? We're already around this campfire learning together about the infinite banking process because we are starting to see the truth. We're starting to look at the matrix pills and starting to figure out which pill are we going to take. What are we going to do? So we're looking at going from someplace where it's taxable and we're getting a paltry amount, a small amount of return on our money, to someplace where it's guaranteed, it's growing tax-free, and we have access to it. So we've talked about the dividends. We've talked about the dividends are just a return of the profit back to us. So those dividends come back tax-free. The money grows tax-free. The death benefit grows tax-free. This is just the power of the dividend alone. And there's choices what you can do with it. Now, we always set it up that your dividends are buying more paid-up additions, which is a mini version of your policy that increases your cash and increases your death benefit. Why do we do that? Because it's the best thing for your banking business. Remember, it is the verb of banking. I'm a banker, not it is the motion that we teach you guys about. So let's keep moving on. So what's the first step in how that you set this up? When we talk about how much should I put in? This is probably one of the most common questions that I get on a daily and weekly basis. I had a younger guy at 55 years old, had a great conversation with him. At one point, he was crushing it in real estate. Over 20 rental properties, 20 doors, had some life stuff happen, and now he's not, he doesn't have that $27,000 a month coming in income, and he knows he can do it because he's been there before. I know you guys can do it because you've been there before, but we have to start level set and start paying ourselves first. I'm going to go into this again. You hear me say it almost every week, but what are the first two commandments? Could I get them here in the chat? Can I get them down below? The first two commandments are, number one, we must love God with all of our hearts, our minds, and our souls. Number two is to love thy neighbor like thyself. What most Americans are doing at saving a 0.3% savings right now in our country is, instead of going God, self, neighbor, right? 1, 2, 3, we're doing what? We're going 1, 3, 2. Whatever's left over is coming to us. That's not right, folks. On the airplane, they don't teach you when the mask comes down. Yeah, like put it on the guy across the row. Put it on the woman across the row. Go help them. Don't worry about yourself. No, we have to do what the richest man in Babylon taught us to do. Pay ourselves a minimum of 10%. You make $100,000, that's $10,000 a year. You make $50,000, it's $5,000 a year, right? Just simple math. You make $1 million, it's $100,000 a year. Pay yourself first and get that discipline, because you all know what the two pains in life are, right? Not marriage. I know some of you are thinking that. Not taxes. It's the pain of regret or the pain of discipline, and you choose. This is the first principle. Save at least 10%, because why? We're teaching you, you must have surplus money to make infinite banking work for yourself. You're starting an additional business to whatever business you have that makes money. Number two is, what is your goal? What are we going to do with this money? What is the thing that you're either going to solve in your life or the opportunity? And one of the beautiful things about infinite banking is you don't get a choice in one of the goals. In the second goal, you are creating a guaranteed tax-free estate. So we're just saying, hey, redirect your savings. We've already shown you before how much more optimal and why the banks have $202 billion in bank-owned life insurance. So why don't we have more life insurance? Oh, because someone said life insurance Frank Nader back in '79 said, oh, it's too unclear. And Dave Ramsey says, buy term, invest the difference. Dave, you dummy. Like, I love you. You've helped a lot of people. But come on, man. Term pays out 2% of the time. You want something that's solid from the beginning, that you're in control of, and that takes your discipline to set it up. And this vehicle that we talk about, it's designed for growth. It's designed to never be worth less tomorrow than it is today. Every single day it grows. You pay your annual premium deposit, you pay your monthly premium deposit, however you set up your account, it's going to keep growing, and it teaches you that discipline. And then, like I said, it protects your future. This is where you're taking control. I'm spending a lot of time on your first step because this step is the step, the decision, the moment in your life that sets you up for massive success. So let's go into this a little bit deeper. Remember, we're keeping this super simple. So far, we've talked about what this is, where you've been groomed to put your money, and what your first step is. So let's talk about understanding the policy. You know, infinite banking made simple. This isn't your average whole life insurance policy. Even though I talked to a lot of folks who are like, Jason, man, I set up my whole life insurance 10 years ago, 15 years ago, and they'll name the company, and it'll be a big company that doesn't support infinite banking so much, but I'm like, that's super valuable. Don't do anything with it. That is protecting your family. It has cash value. It will continue to grow rapidly now that you're past this period of time. But if you're looking to create a banking system on top of that, let's have a conversation. Let's talk about your specially engineered for you whole life. Specially engineered for you. Like everyone that's on this call, we might all want to put the same amount of money into our vehicle, into our privatized banking system, our infinite banking concept system, right? We might all want to put the same amount in, but it's going to look different for each single one of us because we're going to have different goals. We're going to live in different states potentially. We're going to be at different ages, different income levels, different variables. So this is why it's so important to have an engineer or someone that really understands how you're going to do this. It's designed for banking purposes. It's specially engineered with cash, high cash returns right away. High cash availability is a better term. And this gives you instant access. Like I put an example where my first policy, I put $96,000 into the policy and I pulled $76,000 out immediately, right? I'm going to go a little bit deeper into that on the next page. But it's really that special engineering because I was looking to take back control from other systems, other families, the interest that I was giving away in 9 other places. I wanted to bring that all back to the Sipples. That's all I did. I took money I saved, that money that came back over time, money from other places that I had, and put it all into one pot and then used it. That's all. I just redirected everything I had, saved, worked hard, and had some discipline, and then was able to pay off those debts. You might have heard that whole life is the worst investment you can make. I'd say that's probably true because it's not an investment. This is the foundation for what you're building. I've already talked about buy term, invest the difference to go make more money, but what we teach you is you're going to put your money, your savings, your surplus money, that 10% that the richest man in Babylon told you to save, you're going to put that money into this specially engineered vehicle that's guaranteed to grow. It is rock solid. There's nobody getting inside this fist. There's nobody getting inside of here, ever. This just keeps growing and growing and growing, and then we're borrowing from the general fund of the life insurance company. So we put in, let's say we put in 100,000, we have 80 to 90,000 immediately available, depending on the design, and we're gonna take that money and put it to work. We're gonna take that money and pay off debts and recapture and recycle the interest. We're gonna buy a vehicle and we're gonna pay ourselves back. We're gonna go into an investment if that's at the point to make our little green men go to work. And now we have the and asset. We have money working here and making a spread here, right? This is the fun stuff. This is where it really gets exciting because we're only limited by our imagination. So again, it's not your average whole life. It's specially structured for you, cash rich, whole life from a mutually owned, dividend paying, whole life company. If anybody says anything other than that, say, no thank you, I want to be in control. Any other vehicle, if you guys find one that's better than this, please tell me immediately and I'll start teaching that. And this is a tool for your system. But remember, you have to have all the mindset, the discipline, the things to make this work as well. So applying the concept. I've already been talking about this a little bit. Once you're putting the money, your surplus money, redirecting it instead of depositing it in your savings, now it's going into your specially engineered whole life, you're going to have options. You can use it to pay off debts, to clean off the interest, the high interest, the predatory interest rate, which is an average of 23.5% right now. In the chat, is that not ridiculous? You put your money in a bank, all right, folks? You need to buy something that you can't afford with one paycheck, so now you put it on a credit card. Your 0% expires, and now you're paying 23.5% on that card or more? That's insane. That's insane. That is just the definition of insanity. But guess what? The banks are trying to help us out, right? So why is it that we're not succeeding? Well, it is Parkinson's law. It is our inability to have delayed gratification. So when we start controlling the banking system, when we start playing this game our way, when we start playing by the rules that everyone else is using, you guys are setting yourself up to win. We're going to pay off those debts. We're going to recapture, recycle that interest. Then we're going to use it for the purchases we make in our life anyhow. Our vacations, our ski vacations, our beach vacations, our cross-country trips in an RV, you know, Drew's party time, whatever it might be, we're going to start using it to purchase the things we're going to purchase anyhow. And we're going to pay ourselves back. And then we're going to use it to invest. That's the third stage. Because it doesn't make sense to go past the debts when there are guaranteed interest we can recapture with no risk to jump to investing. So again, don't get focused on the numbers I'm talking about. Don't get focused on how you're going to do it today. Just start thinking about how much surplus money do I have? What are the things I want to accomplish? And where can I put it other than a properly structured policy where I have access to it, where it's guaranteed to grow tax-free, where it's protected against liens and judgment, where it gives me a guaranteed legacy, and where it's in a stable environment, and put that money to work. And I'm in control of it, by the way. So these are the things that we want to teach you how to do. These are the things that will change your financial scenario forever. So in action, again, you're going to use it to pay off debts. You're going to complete the circle. You're going to go ahead, instead of having your debts go out on the 9th, the 1st, the 15th of the month, you build up your system, you capitalize it either over time or you capitalize it on the front end in your specially engineered policy, right? We got the beginning of the circle here. We move the money from here to the debt. Now the debt recaptures and it comes back to our system. And it just keeps going around that circle. Every debt we pay off, $400 comes back here. Next debt comes back here. And we're just eliminating that debt and recapturing the interest. And your policy is growing tax-free. It's earning you interest and dividends on the whole amount you've deposited. Not just the cash value in the policy. On the entire amount that's growing over time while you're using the money. The save and spend system. So I put here, I paid off $76,000 in debt. That was the first thing we did. I'm going to ask you guys a question. I want to see how good you are at math. So in year one, Follow me here with the math, don't get lost. So in year 1, for our first policy in our family, it was to pay off debt. We put $36,000 annual in. I put in an additional $60,000 as a dump in, just added lighter fluid, went to a fire to grow faster, give me higher access right away. All right, that's what it was good for. Overinsured my body a little bit too, sure, but now I have access to $76,000 in the first 30 days. We pull out that loan, we pay off those 9 debts that used to go out to other families. That's another way of looking at it. I'm taking care of these neighbors and these neighbors and these neighbors, because I've always been doing, before this, 1, 3, 2, right, instead of 1, 2, 3. And now, on the 1st, the 5th, the 8th, the 15th, all 9 of those debts, our car, our truck, a water filtration system, credit card consolidation. Like, I've made all the mistakes, folks. Don't get me wrong, I'm not standing here teaching you this because I haven't made the mistakes, but now I'm paying us back, the Sipples back, $2,200 a month. Times 12 is $26,400. The simple interest on that loan, this is where you guys get to do some math with me, is $4,000. Can you tell me, in the state that you live in, is $26,000 more than $4,000? Just simple yes or no. I know where Drew's from in Ohio, it might be no, but I'm not sure about everywhere else. So is that a yes? You know, you got a yes from Angela, John says yes. All right, Frank says yes. So my West Coast people know it's up. Joshua Roper says yes. All right, everyone says yes. So that's the cash flow that we're looking at. We're saying, what is our money doing? So if I pay $4,000 of simple interest to that loan to be able to have $22,000 available for our family to go towards the next debt or the next thing that we need, well, then that is increasing the choices we have in our financial system, in our family privatized banking system. And we're going to keep just doing that, paying ourselves back. Now go towards the next debt. And then once that debt's paid off, now you add that additional money back to ourselves. Super simple, right? Super simple. And again, infinite banking is just changing one thing. Where does your surplus money go first? Your savings. I'm going to keep saying this over and over again. There must be savings. If you don't have savings yet, we can look at your financial system, see if there's holes in your bucket, see if there's leakage in your bucket. I have one guy, he'll love me sharing this, really good in shape, young guy, great profession, sales guy, on the road all the time, making, you know, $100 and some thousand a year, and he was saving like $200 or $300 a month. But he told me all of his bills. He told me his car payment. He told me his rent, which is insane. And he told me, and he got to the end, I'm like, you should have a few $1,000s left over. Where's that money going? And when he really dug into it and wrote everything down, he found out that he was eating all of his savings. He was going out and probably eating Chipotle a couple times a day or a week, and you know, ends up with over $1,100 now going into his policy every month. It only took him about 6 weeks to find that leakage. So do you have leakage in your life? Can you guys tell me, do you guys have any financial leakage? Are there places where you can tighten up without taking the joy out of your life and maybe just have a little bit more discipline to reach your long-term goal? I know we still can. I know we get to the weekend and we want to go out and enjoy ourselves, but what if instead of doing that, we cooked together, we had fun together, right? This is where Dave Ramsey's got some, you know, some stock in my life, that he teaches us this discipline of taking care of our money. We have to respect our money so it respects us. It's more than a strategy. This is a lifestyle that I'm teaching you right now. I'm teaching you how to fish. You'll never be hungry. You're being empowered to take back control of the banking function in your life. And I'm also teaching you how you can buy your legacy right away and make it guaranteed. Right? As long as you keep doing the things, it's a guaranteed legacy for all you folks, all my fathers and mothers out there who really are concerned about what's going to happen to their future generations. This is how we can have that painting of ourselves on the wall. They can be like, hey, look, there's Grandpa Joshua, Grandpa Frank, Grandpa Jason, right? Look at that guy. That guy changed our financial future for our family. And it was only changing the things and optimizing the things in our life. Why put our money in one of the big banks practicing fractional banking? that are unstable, that have our money not protected, that aren't paying us hardly anything but making a ton on us, why not put it in a specially engineered policy where we, us the owners, are in control of it? We decide how we're going to use the money. We know that we get a guaranteed compounding interest year over year. We're most likely earning dividends. It's protected against liens and judgment. It has stability, and we know that we can use the money for the things we're going to need in life anyhow. This is all we're teaching you. You either pay interest, or you earn interest, or you give up the opportunity to earn interest. Which one of those do you guys want to be? So again, it starts with your vision. It starts with, what do you really want? It starts, do you want to redefine your future? Is this something that you will commit to fully? No holding back. We only get to do this one time, folks. Let's embark on the journey together. Let's build your wealth. Let's see where you're at today. And if it's not the time, it's just not the time yet. So you guys are financial trailblazers. You're in the 5% because you're here. And this is a big group of you today. So I'm super impressed, as always. We're going to keep having fun every week. And I want you guys to keep coming back, keep learning, join this revolution, take action, or at least apply knowledge, get a personalized strategy, stay informed, subscribe for more insights, right, to the channel. If you want to have a conversation with me, you can book a call there, right? Right there's my information. Any questions from you guys? I'll wrap this up here quickly and with some enthusiasm. And as always, I'm super grateful for all of you. It's a lot of fun being here every week with you, seeing the same names and new names coming back. You guys make this exciting. Super blessed to share my knowledge with you, my journey with you. I don't see any questions. How can we get started with limited funds? Angela, that's a great question. So my first thought would be, if there isn't financial leakage, which most of us have some sort of financial leakage, meaning, are we overpaying on monthly credit cards? Are we paying more than a minimum, is what I mean by overpaying. Are there other things that we might be, subscriptions we have? What are the things that we don't really need, or we're paying more than we need to? And then how much money is that? And then you start looking at, are we putting money into a retirement plan, but right now our future isn't in good order? That's just an opportunity to look at what that might look like. Remember, I'm not giving financial advice because I'm not a financial advisor, but those are a couple of the areas. And then the other thing we do is, how can we add more value? How can we do what we love to do and get paid to do it? It's okay to get paid to do it, right? One of my close friends is writing a book. I'm on a disability, the bulk of my check is. So with that, then I would just look at other ways where you can support other people. If you're on the phone all the time, if that's one of your skill sets, are there people that could use your help in following up with things and wherever your skill set may lie? Because you definitely have a skill set. It's going to be making more money first before you're doing this. I mean, remember, term insurance isn't terrible. If you're trying to protect your family and you're protecting a business and you're limited on funds, by all means, convertible term might be what you're looking at. There you go. Blankets. Hey, there's a great story about someone who opened a business, Angela. It was somewhere, it's in one of the books I read, I don't remember exactly, but they ended up just exactly that, moved from California to this small town, and now the whole town is supporting their making blankets, right? And quilting, I think it was. So there's definitely something out there. We all have our gift. We're all unique. And I appreciate the question. Well, if I don't see anything else pop up, I'm blessed to have all of you here. Come back next week. We're going to have some fun together. We'll keep having new insights, new ways, new things to relate everything back to how can you take back control of your money by changing just one thing. So today we talked about, what is infinite banking. You guys might have heard of it called the infinite banking concept, privatizing your banking, the and asset. There's all these different terminologies around infinite banking, but really all it is a specially engineered whole life policy from a mutually owned company. So now that you've seen how simple it is to pay yourself first, to change one thing, to set this up for all of your financial needs, then go ahead, and if you're new here, and hit that like button, subscribe, and smash the bell so you get alerted for new content. I'll see you in the next video where I'm going to teach you some more things that you really want to know about infinite banking. So go find me here, go check that next video out, and I'll see you soon. Be blessed, have an amazing day, and remember, it all starts with your decision to take back control of your money and stop giving it away to others. Be blessed.